Hey everyone, welcome to another episode of Freedom Fighters. Nathan here. Just wanted to do a little bit of an informational piece today and provide you with a bit of education as to what a lender looks for when they're assessing your home loan application. Now, a big part of this is called the 6C's of credit, and I would like to discuss those with you today so you can take it away and know a little bit more about what the lender is looking for when you apply for a home loan. Now, I'll start with the first C, and that is capacity. And capacity pretty much means the client or the borrower's ability to make the loan repayments. So in this, the lender will assess the income, cash flow, expenses, and other existing liabilities such as your credit cards or other home loans. And that is all considered concurrently to be able to make an assessment as to whether you can actually afford that loan being applied for. Moving on to credit score or credit worthiness. Now, this assesses the overall financial strength of the applicant or client. Now, when looking at a client's credit score, this is given to them by a rating through credit reports, which are ran by the lender or the broker. Either can order these. Now, the information that's discussed in the credit report has any defaults or any late payments on previous accounts or current accounts. It also discusses what liabilities they have open. So it's important that all liabilities such as credit cards and car loans and personal loans are discussed with the broker by the client so they can be forwarded on to the bank to complete their full assessment. Credit scoring can also be overall strengths of the application when looking at the application submitted to the lender. Now onto character. So character can actually be a mixture of a client's credit worthiness or the credit score compared to their capacity as well. Now, when assessing character, a lender will like to look at the conduct along these accounts in terms of their credit cards or any open loans. So they will sometimes request to see your statements, even if it's not got anything to do with the loan, just to see how you are managing your accounts. This proves good character if you're able to make your repayments on time and have no defaults listed against your name. And in terms of an additional form of character assessment, they'll also look at things like employment, just to ensure that you've had consistent income for an extended period of time and not changing your job very often, and making sure that what they're going to approve you at is going to be the situation moving forward. Conditions. This relates to a variety of conditions with regards to the actual loan itself, whether that be interest rate, principal and interest repayments, or interest-only repayments, and assessing which is much more suitable for that client, and also with things such as the purpose of the funds that are being taken out in terms of whether it could be for owner-occupied purposes or for investment purposes, and just assessing which one is more suitable for the client based on the situation with what they're doing. It's important that these are looked at pretty carefully, because if we want to be able to get the right product for the client, the exact purpose of the funds need to be declared, and also the most suitable repayment type. Collateral, or better known as security, relates to the asset which is actually securing the loan. Now, in this process, a lender or a broker will order a valuation on the said security property, and then a lender will assess what the acceptable percentage of that value they'll accept as a loan amount. This value refers to the loan to value ratio, and pretty much just means if you had a property worth $500,000 and you had a loan amount worth $400,000, that would be an 80% LVR, which in an ideal world you'd like to keep, because if you go over the 80%, you could be up for additional fees such as lender's mortgage insurance, which some lenders will accept and scrutinize a lot more than just regular loans, or some won't even accept it at all. So it's important that the broker assesses what the loan to value ratio is going to be, comparing the actual loan amount that's required to settle on that loan, and also the value of the property that's securing the loan. Cool. Last one but not least, common sense. Now, with all the laws coming out in the market with regards to protecting the consumer, it's very, very important that a broker make an assessment and ask questions like, is this a suitable loan for the customer, and is it in their best interest? And does the whole transaction make sense? Are they going to be using the funds for something that can be verified, or are we going to be, submitting something that we're not even sure of? So it comes down to asking those important questions up front and finding out the customer's scenario as a whole. So there you have it, the 6 C's of credit. And look, I hope that today you got something out of knowing what the bank will look for when assessing your application. Like I said, it's important that a pre-assessment is done by your financial broker to be able to assess what your most suitable lending options are before submitting to a bank. Thanks for your time, and as always, any questions or queries, feel free to get in touch with the team at My Mortgage Freedom, and we'd be happy to help. Over and out.